Yeah, so a bit higher than expected. Let's do the numbers first of all. So you probably remember the big spike of the energy price squeeze that we've just been through. This is showing you the rate at which prices go up each year. So that's inflation. It's an annual rate. And that's kind of where the Bank of England wants it to be. So around 2%, and you've got a kind of percentage either way. It went up this time around. So the latest data, October up to 2.3%.
Just the blue part ticking up?
Yeah, just that little bit there. Just that little bit there. Not like a massive change, but it's worth just saying most economists thought it would go up, but by slightly less than that. They thought it'd go up to 2.2%. And the reason for that is if you kind of break down what's causing this, look at the different component parts. So here you've got all of this. This is taking, inflation is basically this basket of different goods and services that we spend our money on each month. And of that basket, by far and away the biggest upwards contribution, so actually 0.5 percentage points of that total 2.2%, that was energy prices. It was almost entirely energy prices, because obviously that was the month where the Ofgem cap came in. It rose by 9.5%, and so everyone started to feel that.
If we just go back a chart quickly in terms of the overall picture, when we spiked initially, energy was a big factor for that. When we came back down again, energy was a big factor. And we just no longer have that positive offset of energy prices still coming down. Yeah. And just gauge for us, so, I mean, the target for the Bank of England is actually within this range. So the tick up this morning is going to delay rate cuts, but it's not the end of the world.
Well, it might delay rate cuts. I mean, so it's not the end of the world. It's within their range. It's not the kind of thing they're going to look at and panic. But first of all, it's a little bit higher. Second of all, I think for a lot of people who have been experiencing this in the last few years, high energy costs, high inflation, it's just unnerving to see that go up. And I'm sure that if you're paying those bills kind of regularly, then you'll have seen them go up. But when it comes to kind of bank expectations, so if we kind of go and look at where things are at the moment. So at the moment, that line there is showing you where bank interest rates are right now. So
this is the Bank of England rate?
The Bank of England rate. So 4.75%, that's the rate that obviously feeds into mortgages. It feeds into your savings rates potentially as well. Next August, OK, there are kind of investors betting constantly on what's likely to happen to rates. Next August, previously, up until around the time of the budget, the expectation was that come next August, interest rates would be heading down to about 3.8%. So that's quite a big fall. You can see from where we are now to kind of 3.8, almost 3.5%. But just look at what happened to this line after the budget, because, I mean, we're talking obviously about the latest inflation numbers. But the big thing that changed was after the budget, a lot of people went out there and said, hang on, actually, we don't think they're coming down as much. And that's partly because the government is spending more, borrowing more. And as a result of that, there's kind of less room for the Bank of England to cut interest rates. But today, so look at that line again. We'll add on a tiny little thing just to show you today. Today, it's gone up a wee bit. So you can see just in proportion, the change as a result of the inflation numbers we've just had through today is quite small in relation to the quite big change that we had after the budget.
Talk to us, though, more broadly about the sort of borrowing costs of the UK post-budget, because we've had, a good few weeks to digest whether this was a sort of Liz Truss moment or far from it.
Yeah, and it's really good you asked that, because, I mean, at the time of the budget, we were keeping an eye on what was happening to the rate at which the government is charged for interest. And this is one of the metrics you can see, how nervous are people about all that extra borrowing the government is going to do. And what this is showing you, it's a slightly more complex chart than some of the previous ones, but actually it's a really good way of getting a sense of, were people shocked by this? This is showing you, after each budget going back to 2006, so this is just days after each budget, going all the way back to the kind of Blair era and the Brown era, this is the kind of range at which those UK government costs used to kind of move in relation to German and in relation to US costs. So anything within that area is within the realms of recent history. And this budget, OK, if you bring on the change in borrowing costs, you can see that for a period actually shortly after the budget, those borrowing costs did go higher than they were typically after previous budgets. But, I'll bring on the Truss moment, they were nowhere near as high as they went after that Liz Truss mini-budget. So I think what we've seen here is definitely investors out there saying, hang on, we're seeing all this extra borrowing you're doing as a country, we're going to reprice that. And as a result, your interest rates are going to be higher than, for instance, the German or the American interest rates. But they're nowhere near kind of yo-yoing around in the way that they did after the mini-budget. So It's not a crisis, but it's definitely a shift in terms of the kind of affordability. And that then feeds into, how much can Rachel Reeves afford in the future, because that means your interest rate costs are up, your debt interest costs go up, and the amount that you can spend in future is slightly constrained by that.
Two things really interesting jump out to me on this. First is obviously the scale of the fallout in markets from the Liz Truss budget. Also, what's quite interesting is how short-lived it was. After 2 or 3 weeks, in fact, rates were much lower again, and that idea that it was a lasting crashing of the economy effect, not necessarily captured by this chart. The other thing I was just going to say...
By the way, that was the kind of quasi-Kwarteng being fired moment.
In comes Jeremy Hunt.
Those rates went out and Jeremy Hunt comes in.
Calms down. The other thing interesting, as you said, in terms of snapshot of this budget, 10 basis points is what we're saying here, 0.1% above what it was before. Nothing too bad if it stays that way. The question, I guess, in terms of the budget is the data that we see. We got a snapshot of it this morning, inflation. We got a snapshot last week of some GDP data and some unemployment data. That will be the proof of the budget over what?
Yeah.
Not even the rest of this year, but as we get into next year, does the GDP growth, does the unemployment numbers suggest that what they announced back here was sensible or not?
Yeah, so in relation to your second point, definitely not a crisis. And actually, that's kind of what we were saying on the days after the budget. However, definitely a repricing and a surprise for a lot of people, but not a crisis, but a repricing. I think the question on, your second question about growth, the real question is here, did economists look at what happened in the budget and say, that means we're going to massively push up our expectations for what's going to happen to UK economic growth? And actually, there's a good kind of chart just showing you the survey of different economists around the city. Here's what they thought growth was going to look like this year, next year, the year after, before the budget, OK? So those lines, the higher they are, the faster the economy is growing. How did they change when the budget actually came through and people could reassess their growth? Did they go up? Well, here are the latest numbers. And actually, it's slightly lower for this year that we're in at the moment. A touch higher, so a decimal place higher in 2025, and the same in 2026. So if that's your assessment, if that's the city going out there and saying, look, we've seen what you've got, we've seen your plans, and actually we're not really thinking that we're going to upgrade our growth forecast. I imagine Rachel Reeves will be a little bit disappointed by that.
Well, again, predictions once we get years out, it's always hard. The proof will be in the data as we go through the coming couple of months. I look forward to discussing that data when it comes out with you, Ed. We stole 7 minutes, which was much more we were allowed, but I very much enjoyed it. Ed Conway there for us.